This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
What's up, Zinger Nation? Happy Thursday. Welcome back to another episode of Benzinga Live. I'm your host, producer AB. Today, we're going to be taking a look. First, let's just start taking a look at the market. I think things are mostly trading lower right now, especially in terms of well, hold on. Let's pull up. Oh, SPY came back, baby. Pulling up Benzinga Pro now. Again, if you guys have not checked out Benzinga Pro, pro.benzinga.com for your free 2-week trial. We've been, you guys know, don't need to tell you, we've been absolutely ripping past week. The S&P 500 closed up more than 5% last week alone. The best week of the year for the S&P 500. Now, if we go over to the Qs, tech has really been driving a lot of this. You can see the Qs. And the Invesco QQQ tracks basically the 100 biggest NASDAQ composite companies. We got down to below 350 before Halloween, right before Halloween, October 30th. And now we're back above 370 on the Qs. So just an absolute huge rally. Crypto, of course, participating. Let's pull out our 10-minute chart here on Bitcoin. But now becomes the time where you got to ask, is the rally over? Is it still time to buy? Last week, with the market up so much in such a short period of time, I think most people, and I talked about this on Tuesday, common knowledge would say, hey, look, the market's up so much, it can't keep going up, right? You want to buy low, sell high. You don't want to buy high. But with that said, sometimes these times, look right here when the S&P 500 rallied from in July 22 from 370 to 400. That was a huge rally. And I'm sure at the time, a lot of people said, hey, look, this is overextended. We're going too much, too fast. The market can't keep going up forever. And maybe they were sellers up there. Maybe at least they just weren't bullish. And they were vindicated in the short term, right? There were a couple red days. But then what did the market do? It continued to rip higher all the way up to 430 and then gave it all back. So a lot of times, you see this, you see a rally, you see it start to come down, and then it rips higher again. I'm not saying that's for sure what's going to happen, but there will be a lot of people out there that say, okay, that's it. The market went up too high or too much, too fast. It's got to come down here. And they're probably right. And a probably little healthy sell-off is good here. But that doesn't necessarily make me bearish. Last week, let's check out the AAII sentiment survey. So this is the retail investors. Oh my Lanta. I predicted, I said we were going to see this above 40. So that did clear that. I did think it would be a little bit closer to 50. So now this is after last week's rally, or the week ending in week 8. So yesterday, more than 70% of respondents, you can see here, 42.6% and 30.2%. Between those two cohorts, 73% of people are either now bullish or neutral on the market. 73%. That leaves only 27% of people that were bearish. Literally 1 week ago, that number was double and was 50%. So, I guess it just goes to show how quickly sentiment can change with price. And we're seeing that in real time here, because you had more than 50% of people not just saying they weren't bullish, but saying they were bearish or neutral. Only less than 25% of people were bullish 2 weeks ago. So it shows how quickly this, changes. I typically like to be a little bit more on the contrarian side. If I see that everyone's bullish, that kind of scares me a little bit. You can see the historical averages here, typically around 37%. So we are above historical averages in terms of what percentage of people are bullish out there. And that does kind of scare me a little bit. And if we see the market continue to go up and we see that number continue to grow, and the next thing you know, you have 50% of people that are bullish or whatever, then yeah, that is going to spook me a little bit, and could cause me to reconsider some things potentially. But let's go back to our Benzinga Pro. Let's check out some of these names that have been participated in the rally, and a lot of it is big tech. I mean, Apple obviously was getting just hammered. I mean, look at Apple's price action, and I said this on the show. I said, look, for the last 20 years, any big dip in Apple has just proven to be a buying opportunity. And I was like, I don't know why I would see this one as any differently. I don't know why I would think this one is the one for Apple that isn't a buying opportunity. The stock went from nearly $200 a share down to 173, continued going lower, going below 170 to 165 a share. Now Apple's basically gone up every single day since then, and is about 183 a share, 184 if you want to round up. But on top of the bigger names, the IWM, the Russell, was participating in a lot of this rally last week. Now the Russell is starting to give some of this up. And that's what's making me wonder, could this rally be losing legs? Because I liked it. I liked this rally in the sense that it was broad based. It wasn't just the big names. You had your small caps, right? What were the ones we were looking at? We were looking at, I'm going to look at like small growthy companies, but of course there are 2,000 companies in the Russell. There are a lot of different kinds. Right, your Asanas. Asana went from around $16 a share up to 20. Almost went up 35% last week. Your Upstarts, which I think Upstart actually got hammered after earnings, but before Upstart got hammered from earnings, it went from like $23 a share up to 32, right? Your Roku's, huge jump in Roku. And now the small caps are starting to give it back a little bit. You can see here the IWM got up to 175, now back down below 170. So I want to see a little bit more breadth. I want to see a little bit more strength in the small caps again before. Like look at these are ugly candles on the 10-minute. You can see going back to November 3rd, basically a week ago, or last Friday, we were all the way up here, and we've basically just been going straight down ever since. So if I were you guys, and kind of looking at, is this rally going to keep going? Is the rally over? Is it time to short? I would watch how small caps are trading. And if you start to see this chart, and again, I'm looking at the 10-minute here on the Russell. If you start to see this inching back up, that's going to be a sign that investors are coming in and buying these names, these small caps. Some of them aren't even profitable, but they're buying them because they think the market conditions are better. And that could be for a lot of different reasons, right? The 10-year yield, which was approaching 5% a week or so ago, is now down below 4.5%. Inflation expectations are just dropping like flies. I mean, we go here to the AAA gas prices. $3.40 is the current average. Look, that still honestly sounds a little expensive to me. I'm not saying that's like the cheapest thing in the world, but $3.40, you compare that to a year ago, is $3.80. That's 40 cents a gallon. And if you're talking about something that's, 340 cents a gallon, that's not nothing. That's like 10%. And that's how inflation is measured. It's looked at from, a month ago and a year ago. And a month ago, it was $3.70, 30 cents. So that's a huge decrease month over month, and a slightly bigger increase year over year. So, look, last summer, we were looking at $5 average gallon of gas throughout the country. And now we're at $3.40. So I think, it's not just gas prices, but that was one of the big things that was driving the recent uptick back up in inflation, was higher gas prices. All right, I see my man Steve Collation hanging on backstage. It's been a few weeks since we've had Steve on. Without further ado, let's bring my man Steve on the show. All right, Steve, how you doing today?
Hey, Aaron, how are you? Good to see you.
I'm good. It's good to have you back on the show. So, what are you looking at right now? What's been top of mind for you?
Well, it's just really a broad base. I mean, we were extremely. I haven't been on for a few weeks, so when we got down to that 41.22 level, we probably had one of the most oversold conditions, and I was telling everyone we were going to get a really big buy push up, and then I got confirmation on the off my work off the hourly charts, and that even propelled it even further. Right here, I think it's just a few names that are just pushing them. I mean, the Russell looks like death, right? I mean, I have sells on the monthly and the weeklies on that. The Dow's really just holding in here. It's the S&Ps and it's really the NASDAQ, and it's just a few names. It's the Apples, the Nvidias, the Microsofts, the Metas of the world, and it's really that's not the whole makeup of the market. And you're seeing just a very, very, very few names pushing this market up. Of course, the S&Ps will follow to a degree. However, the point is it's not a broad-based participation, and that really worries me. I think the market's going to get somehow. I think the market's going to get a pretty good pullback in the next week to a higher low. I do think we get that 41.22 low holds. There are 4 major gaps below on this move up. Eventually, will get filled sometime in the early. I think one of the gaps will get filled, but the other 3 will probably get filled sometime in the early part of 2024. I think the market's going to hold above. I mean, the market's ignoring the geopolitical risks, and here's Apple that didn't have such a great number, and it's just every day up, and we're up 11 days, 10, 11 days in a row here. To me, this is not going to last. Especially, I have sells on all the broad-based indexes and ETFs on the weekly charts based upon my work. So I'm bearish here for the short term, and then looking for a pullback to a higher low, and then set up again for another push up. Maybe close the year end around the 44, maybe the 44. 40 to 44, 80, 4,500 area.
Yeah, and I mean, I was just talking about that too, Steve, the fact that the IWM has not looked good the past few trading days, and that scares me with this rally. And if I want to buy the S&P or go long again in the market in the short term for a swing trade, I'm going to want to see the IWM start to turn around. I'm going to want to see small caps start to participate again, because I mean, look at this. This is beautiful how the IWM broke through that oversold condition last week. But now, it's just been the exact opposite. Yeah. So
we had shorts above the 174, 175. I think it had 175.51 a couple days back, and it just got absolutely kabooshed here. But I think again, it's just a broad-based rally. I mean, Nvidia's up 13. I mean, Tesla can't get going. My Apple, it's the same names every day. It's just like everybody's piling in, and I'm telling you, I just think that when this transforms, it's just going to be pretty ugly.
Yeah, 100%. So, I mean, right now, I guess if you were going to go short via a swing trade or buy puts or something, what would be names that you're looking at?
Well, I'm only looking for a pullback to get long on my daily work. I'm not thinking they're going to push down 300 handles here, on the S&P. I'm just looking for, anywhere between 60 and 100 points down, a couple hundred points here on the Dow, maybe 500, 600. And I think that could be a really healthy pullback for another push up towards the end of the year.
Yeah. Well, right now, what names are you watching? I mean, you mentioned Apple.
I mean, look at Microsoft. Just every day it just goes up. I mean, it's almost near the all-time highs. And so, I mean, this thing is so overextended. You got to play the right names for the end of the year. It's the same names on pullbacks, on deep oversold conditions off the bigger time frame like the dailies. I'll be looking at Microsoft. I'll be looking at Apple. I'll be looking at Meta. Nvidia, names of that. I mean, there's no reason to, these names are going to continue towards the end of the year. But from here, no, I think they pull in first.
Got it.
Oh, sorry.
You're good.
So, yeah. So I thought I actually turned that off. I apologize. So yeah, so I mean that to me is where I think the catalyst is on the overall market, and I think that that's what we're looking at going forward here.
What about, I mean, one name that I was looking at the chart of the other day was Eli Lilly. I mean, this stock has just been crazy. Have you watched this one at all?
No, I just look at the big tech names, the big ETFs, and you can bring it up. I can look at it if you like.
Yeah. I mean, this stock it's with that weight loss drug. I mean, you look, this is the daily chart. It's just been ripping. I mean, it's been, I think I want to say it's up like 80% this year, and it's a $500 billion company. I feel like it's got to come down at some point, but maybe these new weight loss drugs really are that popular. I'm not sure.
Well, that is a problem here. Everybody's looking to lose weight. I mean, I'm always looking to lose weight, right? Just exercising at a certain age just does so much, right? I'm 60, and you try to work out as much as you can, run, exercise, bike ride, do whatever, and your metabolism slows down, and everybody's looking for a faster way. And if these drugs can potentially help that, but you got to break. I mean, this thing's up in a straight line. I mean, it's a powerful company, it's a phenomenal company, but I wouldn't be buying it up here. I mean, I would be waiting for some oversold conditions on the weekly charts to buy it again. Obviously, it's in a significant uptrend, but we'll see what the earnings and how the response of these drugs are going to go going forward.
Got it. And
I mean,
then
I wouldn't buy it up here. Absolutely not.
Yeah, and I would not either. So going back to big tech names, I mean, Microsoft, Apple, any other ones? I mean,
Yeah, I mean,
let's
you got
check
the
out.
Metas of the world. I mean, I'm not really a fan of Google or anything like that because you got the Amazons of the world. I mean, names like that on pullbacks, not here, not here. When I think there's if the S&Ps get down to that 4,300, 4,320, I think I don't think, anywhere between the 4,280 and 4,300, I think the market's going to make a higher low, and I think that's what's going to propel the next push up towards the end of the year. But then going to 2024, I'm not so bullish. I think we're going to get some decent pullbacks.
Got it.
Oil's telling you that the reason why the bonds rallied from 07 up to 15, obviously, markets are telling you, even oil's down from 87. We could have a severe recession here, and you got to read what the commodity markets and the financial and futures are saying here. So even though CPI number is still high, I still think we're in a stagflationary period, because if you look at the market as a whole, what you're doing is you're looking at the prices are not coming down in the grocery stores. Prices are high. Yeah, gasoline has come down. I was paying what, 370, 369 now. Now it's about 305 now, right? So gasoline has come down, which is good, but food is still high. Rental is still very high. So things aren't coming down like they should. And why would anybody want to listen to the Federal Reserve when they've missed the entire boat up? Like, to me, the natural way to look at the market is the natural bond market. Bond prices go from 07 to 115, and you see how rates have come down. That's the natural market, and this markets are telling you that you have some economic woes ahead of us here.
Yeah, I mean, and I think that's what's concerning for a lot of people is on the heels of this rally, you had rates dropping and inflation expected to drop and all these things. But now that's kind of the expectation, right? Is that CPI is going to be lower next report, and all.
Well, we don't know that. We don't know. I mean, we're hoping it's going to be lower, right? We don't know. I mean, it could have an uptick here.
Right, and we'll just have to see. But I think that's at least what a lot of economists are expecting right now is inflation to fall a little bit, and that could be driving the rally. But now that all that stuff is somewhat priced in, like you said, if we get a surprise and it upticks, then all that goes out the window. So right now, I think a lot of people still concerned about a looming slowdown in spending, a potential recession, on top of, is inflation really going to keep falling down? You still have rates.
You also have to factor, I mean to interrupt you, you also have to factor consumer credit card defaults here. Big banks are worried about this. Over $1.7 trillion of consumer debt on credit cards. It's staggering.
Yeah, I mean, I've definitely been seeing some concerning numbers, to say the least, when it comes to the credit card environment out there. But I guess we'll just have to see. Nikita Thomas is asking, is Powell going to speak today?
2:00, I believe he speaks.
Yeah, he's on a panel or something this afternoon, so we'll cover that. Yeah, Market, we'll get David back on the show. Well, all right, Steve. It's always good to have you back on. We'll get you back on next week. Take care.
You got it. Have a great weekend and take care, everybody. Thank you, Aaron.
You as well. All right, guys. That was Steve Kalasian. Trade Easy if you guys want to get more from him. We're going to keep it ticking along. We've got another great guest lined up. I see my man Robert Roy hanging out backstage. So I'll do some I'll take some stocks from the chat for a moment. We've got a couple minutes till noon, and then and then we'll bring Rob on. Let's see. I see James is talking about ETH, MODG, James D, Callaway down. Yeah, I was looking at Callaway stock the other day. I mean, this thing is almost at its COVID lows, which I mean, look, I don't know what's going on with this company. I'd have to go into the financial reports. I think what's going on is there's a lot of stuff with Topgolf that's probably not great. And I don't know. It's just so shocking because during COVID, golf became so much more like there were like millions of new golfers that had never golfed before that started golfing during COVID. And you would think Callaway would benefit a lot from that. And yet somehow the stock is below where it was when we had this big boom in new golfers. So I don't know what's the deal with this, but I mean, I just would not touch this stock based on how ugly it's trading. I mean, it's just as near and dear as it is to my heart, and I'm someone who plays Callaway irons and a Callaway driver. This stock is just so ugly. And again, I really don't understand it because you would think just logically. I mean, look, the stock got down to around $5 at its lowest point during COVID. We're at like $10 right now. But again, there were millions of new golf. I mean, let's look it up. How many new golfers were there since? The pandemic's impact on the golf boom. I mean, again, like it just seems like logically the stock should be up from that point because new customers have entered the market. All right, let's go ahead and bring our next guest on the stream, my man Robert Roy, tradinglikeaboss.com. Without further ado, let's give Robert a special intro and see what he's been watching when we get back. What is up, Mr. Roy? How you doing?
Aaron, I'm great. How about yourself?
I'm good. It's good to have you back on. I know it's been a few weeks. We've had kind of some crazy scheduling, but what's new with you? What you been watching?
So, I mean, really, the last time I was on, we spent a bunch of time on the S&P 500 talking about where it was going. And it was pre this drop that it had made to the last leg down. We were probably over here somewhere on that way down. Give or take. And there's this dark black line, there's 4181 on the S&P 500. That is a Fibonacci level. You'll hear traders watching 4200. Why? They see some history back there. 4181 is a pure number right from Fibs. And we came down and we just smashed it right here just 2 weeks ago. We gapped down below, came back up, retested it and failed. And then we hit our next level we called, which was the S&P 500. The 10% correction on the S&P 500 from our 52-week high right in here. And then one more day down, we've had a nice climb up. And we are struggling right now. And this is what every bit of my picking right now is based on this. We're struggling to get above the recent swing high, Aaron. We've come up and we've inched into it for the last 3 days, but we just can't seem to break above that level, which is ultra concerning to me, particularly that if we don't get back above, we stay inside of this overall downtrend that we've had here since June of this year. About mid-June of this year. So based on that, all of my trades have been very short term. We've really not done any swing trades at all. Still a bunch of cash flow strategy trades, but not any swing trades. They've all been in and out day trades, just based on what the market is doing.
So, Robert, you saying basically that you don't even see this as really a bullish trend until we break that channel, until we break that where you have those two lines, kind of that's showing that overall downtrend?
Correct. We've got a couple of resistance things above our head, right? We've got the recent swing high here, which was at 43.9357, right? We pushed right up to it today. You got the 4,400, and then you've got this downtrend line that comes in from June. Right? We've got to get above all of that. On top of that, only today, Aaron, did the 8 moving average just cross up through the 55. So we barely are stretching into what we could deem as bullish aggressive, which means to me that I could take a bullish directional trade after the close today, assuming we close above, but I would have to take it aggressively, which means a lower number of either contracts or dollars invested in that trade. It would be too much risk to try to go at a full lot. So if you put $500 or 10 contracts or whatever the number is, I would say we want to do less until we can get the 21 back up higher as well. We're just not in the right order. So I still see this overall bearish downtrend. We're moving up and we had some really nice days. I just don't know if that was a signal of we're bullish now, go.
Right. So what level, I mean, if we hit that trend line up top on that channel, would you expect a sharper pullback or, would you be watching more, okay, let's see if we break through this?
What I'm really hoping for, Aaron, is we take another 2 or 3 days to get up to this trend line, which will put us right at this 4,400 level as well. And if we do, and we can break it there, retest and bounce, then I'm very positive, and I will be sure to be looking for swing trades at that point. Until then, I'm just going to stick with the day, but I'd like it to take a few more days, if I had any say, to take a few more days to break out of that level first, just so we've got a confluence of these 2 points here and just gives me a stronger entry. Think of a floor made out of 2 pieces of sheetrock plywood instead of 1, or a ceiling having 2 pieces of sheetrock on it instead of 1. It's just a stronger base to work off of if we have that confluence there.
Got it. Well, what about, some individual names, Rob? Which ones have you been trading?
So today, I went after W Day, could not get an entry on it. The options were just not favorable whatsoever, but we had a quick gap up this morning and a really nice pullback to that 221.78. I just could not get an option that fit the criteria that we're looking to enter. And of course, this of every one of the 20 stocks I look at exploded today, right? We're up $5.50. Although we would have been out of this about 226.5. We would not have been anywhere near running up to the highs here. But I did miss out on this. The only one I got off today was one of yours, Aaron, the Qs.
There we go.
You're a big fan.
Yep.
Of QQQ. So this is pivot points. For those that don't know or are unfamiliar with this indicator, it is a market maker's indicator. That's what was created. Market makers can't remember all the different levels on stocks that traders are looking at. So instead, they developed their own series called pivot points. And it works by taking yesterday's high, low, and close, adding them up, dividing by 3, and it gives us this yellow line. And then there's a series of mathematical calculations for all of the resistance, R's, and S support lines. So it took a while. We stretched down today with our wick and bounced right back up, so I wasn't happy there. We closed here, and then we gapped down slightly, and then we broke down below. We closed up, and then right here at 10:45, we retested that pivot point, and we finally got our bounce. So we were able to get the 372.5 is what we picked up there. Plenty of open interest on them. I mean, that was really it. The open interest was phenomenal. We got 372. Yeah, 372. So we had 19,000 open interest and about 9,000 volume today. So tons of activity on this position. Now we're out of it already. We got the bounce here. We broke above. We retested on this candle and we got a bounce. We took the entry. We got out on this candle here. We're only up about 50 cents on that trade. The option itself right now is up about $1.25 at this point from where we got in. So it went higher, but according to the rules of pivots, we took the entry. We followed the rules. We got out of the trade, and we don't get angry because it moved more, in the direction that we were looking at.
Got it. And I mean, right now, I guess with some of these tech names like W Day and what you see in the queues, those were a lot of the names that were driving the rally last week, Rob. I mean, do you think they're kind of running out of steam here? Do you expect tech to remain hot?
I think tech still has some room to go. If we look at Apple as an example, Apple's moving averages, the pink line is on top. If you see, my settings are right here. That's an 8. The brown is in the middle. That's a 55. And the green is on the bottom. It's the 21. They're all exponential. We need that to shift slightly. I need the green to get above the brown line. So I want 8, 21, 55. So we're pretty close to that now. We've got another day or two with normal movement that we'll see that 21 climb above the 55. At that point, I'm definitely bullish on the trade. I love that we broke the recent swing high we had on this downtrend. So we did that. We closed at a resistance level. We retested it and bounced today. Everything is aligning itself for this. The only thing I'd like to see differently, as I said, is our moving averages. So this just being one of the examples, and all three of them that I'm looking at today are all tech, right? Apple being the first one.
Got it. Yeah, I mean, Apple's been up, like 12 days in a row or something crazy at this point. I mean, and people were, so bearish on it. And then it rallied before its earnings, and its earnings were like good, or maybe not great, but the stock had already rallied up so much that it didn't really pop off the earnings, but then has just continued to move higher since then. So just incredible price action in Apple the past few days. This is one that you certainly have to watch if you're looking at the direction of the overall market. I was saying earlier, Rob, do you mind pulling up IWM? I was looking at the small caps earlier, and those ones have not been really participating the past couple days, which to me, if I want to see the market rallying again, I want to see the small caps participating.
Correct. I agree with you. As an overall, I do agree. You're going to find some gems or diamonds in the rough, whatever you want to call it. You're going to find some stocks that will go against what's happening here. We do have a very bearish looking pattern. If we break down below that 8 moving average, it is not boding well for this at all. That gap, we had a nice gap up. What looked like a continuation gap happening here turned into an exhaustion gap because we have just failed ever since. Now, could it just be a retest that we overdid it in those 3 days, trying to make up the massive hit we've taken this year on the rut? Possibly, but with the way these candles are looking the last couple of days, there's not a lot of excitement in them to tell me, ooh, bullish. We are actually, if I stretch this, and I'm going to make it obscenely stretched out purposely, but you could see my moving averages are actually in the right order for bearish. The brown's on the top all the way up here. The green's in the middle, barely, but it's there. And then the pink is on the bottom. If we can break through this 169.5 level, retest and fail, we've got 167.5 as our next downside target. So I'd love to see it, come a line, in line for the rest of the market. I just don't know yet if we're there. My moving averages and my pattern are not giving that to me at this point.
Yeah, I mean, and again, this is one that IWM has been so just underperforming the overall market for really the better part of the last 2 years since we had that downturn that started in late 2021.
Right.
And I think a lot of people have been waiting for a bounce back in the IDM. It looked like we might be getting that last week finally, and then here we go again this week, just straight back down.
Exactly. It's funny. A friend of mine reminded me of it in a conversation about a week ago where he said, this is not your grandfather's stock market. Things are not the same today as they were 50 years ago, 20 years ago. They're not trading the same. They're not reacting the same. Look at what's going on with Powell, with interest rates, on how we thought the economy would be doing. And, we should have been in recession, and, people are calling for depression and all these crazy things. And the market is just fighting tooth and nail to sustain every bit that it can. So the IWM coming back in line, I don't know if it truly is going to or has to, but some of the other stocks out there, particularly in the NASDAQ stocks, have really given us some great opportunities if you're following along and paying attention, right? If we go back to Apple for a second, right? When you talked about it had already moved pre-earnings, right? The news was out. Shh, don't tell anybody, but, right? We already moved. We gapped up on the earnings and that pullback, and you had said really wasn't, maybe wasn't as strong as we thought, but you've got to analyze what happened there, Aaron, right? It was a really nice move on the announcement up, right? We pulled back. We gapped down. Well, we got down here. Stretched a little bit further down, and we bounced. Where did we bounce? We gapped down and pulled back right to a moving average. And not only just the moving average, but that confluence I talk about. Two moving averages right on top of each other where they crossed. We got our bounce off of there. That was a catalyst. And then if you pay attention, this next candle went and closed right at that next fib line. We missed just slightly on the next day here, but we went right to it on the day after, and we bounced on the next fib line the day after that. So when you see, when I see all of these, you had mentioned, Aaron, on how many days it's been bullish, this is what we call a bullish thrusting pattern, right? And it's a very strong bullish thrusting pattern. We have see down here, this is a bearish pattern, but there's a lot of black candles in it, a lot of solid candles where we had bearish days. You didn't have a lot of strength in the push down. It was there, but not as strong of a pattern as what this one is bullish, if that makes sense.
Yep, 100%. I couldn't agree more. I mean, so Rob, I guess right now, would you said you're sticking to only day trades and not really making swing trades until you see a more defined pattern in the market?
In the S&P 500, correct.
Okay, that's just for the S&P 500.
Only that, to me, that is the market. That is the market. That's what I follow along as the market itself is S&P. I don't look at the Dow. I don't really look at the RUT. The only time I look at the RUT is not the IWM or N, but I look at RUT for iron condors. Great strategy, great trade setup on there using iron condors on the index itself. For the market, I'll look at the NASDAQ, but I am very, very heavily engrossed in what the S&P 500 does. I think that is the leader, at least for the way that I was trained as a trader. That's if I can follow along and identify what it's doing there, I can use it to help me guide what else is going on in the market elsewhere and where to be able to take trades and give myself the best opportunity of being right. I'm not going to win all the time. I will, no question, have trades go against me. 28% of my trades will go against me without a doubt, right? There's no question. But I want to identify those areas to enter properly where we minimize our risk and maximize the profit. And finding the right place to trade is better than I just need to find something to trade right now.
Yeah, I mean, so what, I guess, would you be looking for when the market does come back in? Are you looking for longs on the big tech stocks? Are you going to be looking for longs on the beaten up names? What's going to be in your basket of names to attack?
Every one of these 20 stocks that are right here are the ones that I will be looking at, right? That's Apple, Adobe, AMD, Amazon, Booking, Chipotle, Costco, Google, Goldman, Home Depot, MasterCard, Meta, Netflix, Nvidia, Roku, Square, Tesla, United Healthcare, WD. Those are my 20 every single day, every day. I've got varied prices in there, right? You go to a Booking and you're looking at a couple $1,000s. You go to a Square and they broke 50 dollars, right? So we've got all different levels, but no matter what, Aaron, every single day I go through this list, but on the top of the list, no matter what's happening, is Nvidia, Netflix, Tesla. I'm very much about tech. I'm a big believer in the big movers coming out of tech. Can you get a big move out of Goldman Sachs? Yeah, occasionally, but not like you will out of Tesla or a Netflix or an Nvidia.
Yeah, I mean, so what's the benefit of that, Rob, of sticking to the same, 20 names every day versus going on a screener and trying to find the biggest movers or trying to find names that you might not usually trade?
For me, there's a couple of reasons. Number one is, a very good friend of mine talks about building a dossier about your stocks. I talk about that on every one of these stocks. I know their heartbeat, how they eat, how they drink, how they sleep. I know everything about them, that when I can look at an intraday pattern and go, you know what, this is happening next because that's what's setting up right now. So by being able to identify those stocks and knowing those stocks inside and out, I've got a better chance of being right. That's number one. Number two, on the ones I'll pick up off a screener because they had good earnings today, they're great candidates, and I love those more on credit spreads. If it's a stock I don't know, I'd rather do a selling position where I have a better chance of being right with the selling trade than with a buying trade. But if you just go and pop in some of these off-brand names, you're not going to have enough options, open interest to really make it warranted to do that trade. So I know with the stocks that I trade, for the most part, Booking does not have enough open interest, but I love Booking. I'm a big Booking fan. I love trading Booking. But I know it's a higher risk and I trade less contracts. I manage my risk properly based on it. I don't do what I would normally do on a trade with a Booking, not at $80 a contract, per share with a $5 or $6 bid-ask spread.
So can you explain that spread, I guess, a little bit more for our audience that may not be familiar with your with your strategies?
Absolutely. So if we look at, I'm just going to highlight this. Actually, I'm just going to I'll leave my mouse on it. I won't. It's moving, so the data won't do it. So you've got two numbers here, bid and ask. So the difference between the bid ask, there's 2 pennies in here between bid ask. This is on the Qs, right? It's always a very low bid ask spread. That difference is where the market maker is willing to pay for the position. They're willing to buy it from you at 109. But if you want to buy it from them, they're going to, and it's just moved. Right now it's at 107, 108, right? So they're going to give you or ask you for the asking price, and they're going to give you the bid. So if we go down here where they're not trading, this is 18 by 19, right? They're going to give you 18 cents if you want to sell it to them, but they want to sell it to you for 19. That's the guy in the grocery store that bought a gallon of milk for $2 and sells it for $2.50, right? That difference is the spread. I like that very small spread that we have here on the Qs. If we go over to Booking as an example, you're going to see a tremendous difference in that spread. Take a moment to load up. Now, these are options that expire this week. And here we are, Booking, right? We've got a 67 delta, and we're looking at $23.60 versus $27.90. So we're talking about $4.10 difference between there. Now, I can negotiate and try to get in the middle of it, but there's not a lot of open interest. There's very small volume on them. So if you are trading this, you're going to trade these with very small contracts. I look for companies that have big open interest on them. If you look at a NVIDIA as an example, what a move today on them, by the way. So you look at NVIDIA. Now, these options expire tomorrow. They expire on Friday. But I'd be okay with the 475 calls. They have 10,000 open interest and almost 40,000 volume. Open interest is the number of contracts that were open before today, before the market opened today. Volume is how much traded today. Doesn't mean that that's going to add to the open interest tomorrow. They may be buyers and sellers mixed in there, but that will adjust the open interest tomorrow and the volume will reset to 0. So you can see very small bid-ask spread, 680 by 7, 670 by 7, 20, 30, 40 cents of bid-ask spread. I can live with that. $2, $3, $4, $5, maybe a little bit too high for many.
We might have to do a crash course on some of these spreads at a later episode, just when we have more time, because I'm sure there are some people in our audience, Rob, that want to learn more, but running out of time here today. But always great to get you on, man. I mean, it's been a crazy market the past couple of weeks. So, I mean, like in terms of weeks ever for trading for you, where does like last week rank in terms of just crazy rallies?
Yeah, so we did a lot of short-term day trades. We had some really good weeks. We've had explosive moves this year on many of our positions. We've been very blessed with how the market's worked out for us this year. I'm very pleased. I mean, we do an analysis twice a week in one of our trainings, and we call out the trades of this is what we're looking for. If this happens, take the trade. We all follow the same rules on what we look for in the options and so forth. So that's easy. It's really identifying the right position on the chart and the right way to take that trade. So we did well with it. We've done okay this week. I'll do another update tonight for my group on the markets. And if you're watching the stocks and you understand them and you recognize those stocks, you know the patterns and the moves to look to take off, and it actually makes it a lot easier for me to do.
100%. Couldn't agree more. Well, Rob, again, thanks for hopping on. Tradinglikeaboss.com. Wait, tradelikeaboss.com?
Tradinglikeaboss.com.
Tradinglikeaboss.com if you guys want to learn more from Rob. Again, thanks for hopping on. I'll drop that link in the chat, Rob. Take care.
All right, take care, guys. Thanks.
All right, y'all. That was Rob Roy. Tradinglikeaboss.com. Link is in the chat if you want to learn more about Rob's spreads. Great trader, better guy. Always like to get Rob's take on the market, see what he's been watching. Let's pull back up Benzinga Pro real quick, and then we've got a few things to talk about real quick. We have the S&P 500 trying to make it, I want to say 9 straight days in a row with a green close. It might be 8, but we're right here on the edge right now. You can see we're just barely in the green, 2/100ths of a percent in the green. Oh, 3. We're going up. We're going the right direction. So we'll keep watching that throughout the day. I think it might just be kind of like a symbolic thing at this point if it closes up 0.1 or down 0.2% just for that record in terms of how many green days in a row it's been. The Dow Industrial Average completely even. Wow, you don't see that typically. So pretty flat day out there overall. Of course, we talked about it earlier. Russell kind of not doing as hot as the rest, but still pretty even in terms of Russell. Real quick, just because we did have some video game news. Okay, so a GTA trailer was announced for the new game. I mean, this shows you how big the Grand Theft Auto franchise really is. Just a trailer for the new game, GTA 6, was announced. I don't even know like when the trailer comes out or whatever, but either way, well, the company also reported earnings, but the stock's trading higher. I think a lot of people excited. We can go into our news feed here in Benzinga Pro. Again, pro.benzinga.com. And, you can see all the news coming out about Take-Two. So Take-Two, I mean, one of the bigger video game companies in the United States, owns, of course, the Grand Theft Auto. Okay, so Rockstar Games may announce Grand Theft Auto 6 this week. We get that report in here. Take-Two surges amid anticipation of Grand Theft Auto. So you can see just how big of a deal GTA 6 is. And Take-Two's biggest franchises are Grand Theft Auto as well as 2K, like the 2K basketball and golf games. And so either way, big company. You can see here on the daily chart, well off its highs from back in February 2021 when it was above $200 a share. Now it is below 150. Even with this recent rally, I mean, the stock did get down below $100 at one point, rallied back up above 150. But we're still well off the highs here. I mean, you can go back to basically July 2020. We were at the same spot we are now. So if you bought this stock in July 2020, you could hold it for more than 3 years, and you're still even now, if not a little bit in the red. I mean, even before COVID, the stock was $140 a share. Think about how much gaming really grew during COVID. I mean, gaming surged. Gaming blew up during COVID. So many more people were buying gaming consoles, PCs, you name it. People were buying it during COVID, and yet the stock is basically where it was at in 2018. Take-Two Interactive, I mean, it did look like it maybe got a little overextended up here, but Take-Two's stock got up to 140 a share, dropped down to 87. Now we're back at 147, and it's 2023. So I'd be a buyer here if you're looking long-term. Again, my time horizon might be different than yours. I could buy this stock, Take-Two, shares of Take-Two, and hold it for 20 years, 30 years if I wanted to. So, I think just based on everything that we've seen from the company when it comes to Grand Theft Auto, when it comes to the 2K games, there's no reason to believe that this company won't continue to grow, won't continue to make a lot of money when it comes to video games from here on out. And out of all the video game companies, stocks you could buy, this would be the one that I buy. Again, just because the fan base for its two biggest franchises, GTA and 2K, are just so loyal. We'll be spending money on those games year in and year out. I mean, I did this the other day as just an experiment. I went to Twitch And someone in the chat drop it for me. But when did Grand Theft Auto?
Because he's already at Revenant's ready to PK me.
When did
I'm gonna
Grand
go-
Theft
I'm gonna go-
Auto? Okay, I don't know what's going on right now on Twitch. I should have just pulled Twitch up without what was I gonna search? Oh, I was gonna see the most viewed games right now. Grand Theft Auto 5 came out in, let's see. Let's look it up. When did GTA 5 come out? GTA 5 came out September 17th, 2013. 2013. I was still in high school. In 2013, so more than 10 years ago, Grand Theft Auto 5 came out. It still has 172,000 people watching it on Twitch. Compared to almost more than 3 times the amount of Minecraft, way more than the amount of Rocket League, way more than the amount of okay, so Fortnite right now and League of Legends are the only 2 games I'm seeing that have more viewers than GTA 5. Again, a game that came out in 2013. Wow, that's so weird seeing the EA soccer game not called FIFA. It's just been called FIFA my whole entire life. What other games we seeing on here? Pools, hot tubs, and what is that? Oh, are those people actually streaming from the pools, hot tubs? That's weird. It's a weird world of streaming. Okay, Call of Duty Modern Warfare 3. You've got 100,000 people viewing that. Wait, Among Us has 290 viewers total. Damn, that fell off hard. Either way, GTA 5 point stands, 10-year-old game. You still got 170,000 people watching it. If that doesn't show you what kind of staying power that game has, I don't know what will. And when the new one comes out, it should be a huge moneymaker for the company. Alrighty, guys, we are coming up on 12:30 here. We are going to welcome on. We've got an exciting interview, an exclusive interview that we are going to be doing with Mainz Biomed CEO Guido Baechler. Without further ado, let's go ahead and welcome Guido on the show. Let's go ahead and give him our very special intro. How are you doing, sir? Welcome to Benzinga Live.
I'm doing good, Aaron. Thanks for having me on your show.
Of course. So before we get started, why don't you briefly introduce yourself and tell us a little bit about Mainz Biomed?
Yes, love to. So I'm Guido Baechler, CEO. I've been with the company for 2.5 years, and I've spent over 30 years in the diagnostic industry, many years at Roche, and then run startups in the Bay Area. I love MYNZ because they have a very unique position product. It's focused on colorectal cancer, early detection of colorectal cancer that can easily collect it at home and shipped to any labs close by, similar to what everybody is used to do on the COVID testing. But more importantly, some of the new data that we recently reported, combining our advanced technology with AI, we're able now to show, creating tests that are actually able to help prevent colorectal cancer from happening in the first place. And excited to share some more of that news with you in the next 20 minutes.
Yeah, I mean, let's do it. So yesterday, I know a big deal was announced, where MYNZ signed a pact with an AI company or with an AI technical analysis, platform Emerge. Can you tell us a little bit more about this?
Yeah, so we've been in the field for a long time, and so we've been watching. AI is all over every aspect, right? And it's becoming very frequently used in medical diagnostics as well. A lot of imaging tools are using it. Some diagnostics and pharma companies have been using it as well to help select the right compounds. So we were looking for alternative ways, besides the traditional biostatistical approach, to find a company that really kind of fits our culture and is able to help us consolidate the knowledge that we have with their, super powered computer systems and their tools that they've developed over the last 10 years to help us ultimately, create an algorithm that incorporates all our different type of biomarkers that we're using on an individual. For example, if you want to get a test like this, and you would collect very small stool samples, we would run them through our analyzers, we will give you certain biomarker information, and then that would run into our algorithm and basically able to help us predict whether you have colorectal cancer or you're at risk of developing it soon. So it's really is just us moving on with the next generation test, and really also by combining our proprietary biomarkers with the absolute state-of-the-art AI tools that helps us develop. As you look at that website, Liquid Biosciences, this is not about lines anymore, right? AI is doing a lot more. It's using a lot more tools to help actually express and detect new combinations of biomarkers that are very, very predictable of whether you have a disease or not. So that's the approach, really. Liquid Biosciences is clearly a leading company in that space. I'm very excited to, have found each other. They're very passionate about as well, because they believe that, we need to create, it's great to have a test that identifies cancer at an early stage, but how about if you can predict it earlier, right? So if I can actually give you a test that helps you do not have cancer, isn't that what we all want? And that's the approach we're taking together with Liquid Biosciences.
Yeah, 100%. Well, Guido, so congratulations on this deal. Why is it so important for the company moving forward? I mean, what is this deal going to allow you to do?
So what allows us to do really is, continue to develop, right? As you have seen, we recently reported data from our Color Future study, which is very, very relevant and showed really absolutely groundbreaking performance for detecting colorectal cancer, but even more importantly, Aaron, identifying precancerous lesions. And precancerous lesions are something you can identify and then remove during a colonoscopy, which means the patient does move into cancer. That was a very pivotal point for us to get that first stick in the ground. We have additional studies coming out, early detect, in the next coming weeks, which we also now partner with Liquid to create a comparable algorithm. But then ultimately, it's going to be a development process, because our goal is to get our next generation test also through the FDA, and working with a renowned company like Liquid Biosciences is going to make it easy to come up with the appropriate tools to ultimately get our test as efficient as possible passed by the FDA.
Got it. And then Guido, can you tell us more about the company's AI work and how it makes MYNZ in the next generation of tech?
Yeah, so
MYZN?
Yeah, so it's the interesting approach is if you look at the traditional biomarker discovery process, right? So some people discover new biomarkers, they run clinical trials, and they generally run them through the traditional biostatistical approach, right? So there's certain formulas out there, there's certain tools out there that you can use to create best performing results, right? But those are all linear functions, and they're limited. Now, what we've done, we allow now, for example, age and gender and other parameters to be included in our formula, and so it just enables us to look at a really different type of combinations of those biomarkers. It helps us, a biomarker that may initially doesn't look promising when you look at the traditional approach, looks completely different when you wrap it into this AI tool. And when you think about it, basically we're providing the data to Liquid Biosciences, and it takes them about 1 to 2 weeks with the supercomputer to run hundreds of millions of different type of combinations, and ultimately selects the best that works. And so it's really amazing.
That's incredible.
It's what they can get, because with the traditional, the key really is, and with the traditional biostatistics, with the way we generally think, you just can't envision how they're doing it. It's fascinating. So it's new to us too. I've read a lot about it, but this is the first time MYNZ is looking at it. We certainly want to further expand this as well. We focus on colorectal cancer right now, but we have another program ongoing, pancreatic cancer, which is a horrible killer. We have some relationships going on here with microbiome company. We will certainly overlap also an AI algorithm to ultimately create a superior test there as well.
Yeah. So, Guido, I mean, tell us a little bit about the Colo Alert product, which is currently, I think commercially available over in Europe. Are there any plans to get that product over here in the United States?
Yeah, so that great question. So Cola Alert is our first generation product that we launched just kind of post COVID in Germany and selected other countries in Europe. It's a similar concept, Aaron. You basically have two very small collection devices of stool. You collect this at home, total privacy, drop it into any mailbox outside your house. And then you get the results within 5 to 7 days, depending on the turnaround time of the local lab. So that process is working very, very well. So we have you can actually you can purchase the test online. And one example, Aaron, we had a patient about a year ago, was a pregnant woman who already had 2 kids, and she was pregnant with her 3rd baby. And she wasn't feeling great. She felt she wasn't gaining as much weight as she could. So she went to her physician and explained the story. The physician then felt nothing is wrong with you. Just don't worry. You will gain weight. She didn't take this as an answer. She did research. She came across our Cola Alert test and tested herself because she could, right? Because we enabled that. And she unfortunately was positive. She went in with the test result to our physician, who then immediately triggered a colonoscopy. And unfortunately, they identified her as a cancer patient. But because of our test, she got earlier identified and she gave birth to a beautiful baby, and is now has a higher chance of being the mother of her children in the future. So this is what we do, right? So the test in Europe is clearly very successful. And are we planning to bring that test to the United States? The answer is no. Our test that we plan to bring to the United States is the next generation, which includes additional biomarkers. And again, the AI algorithm that we discussed before, that's the plan that we want to get that into the United States.
Yeah, I mean, that's incredible. I mean, that's a great story that you're able to help, someone, especially, an expecting mother. Do you think that's kind of the way the medical field is going? I mean, you mentioned COVID tests too. Obviously, that was the first time that we had a major pandemic where people could test themselves and find out on their own. I mean, do you think we're going to see more and more of that at-home tests, things people can do on their own and maybe send to a lab so they don't have to go through all these diagnostic tests with a doctor?
I think that's the ultimate path, right? So you still have to be careful, right? You still need physicians involved in helping you interpret the results, but fundamentally, yes, I think COVID changed that significantly. You see a lot more telemedicine, right? And that all happened through COVID. Really pushed that forward. So if I can do my testing at home, ship it in, get the results, and then my physician sees it online, I don't need to see the physician, right? So again, doing at home collection, convenient, simple, is absolutely the key to simplify, diagnostic testing in the future. And yes, I think the trend has already started. And I think products like ours and others that make it easy to collect at home will actually absolutely take off in the future.
I did one that was for a food allergy test,
Yep.
and I actually had to prick my own finger and collect blood, which was kind of fun to do at home. But I think maybe some people might have not, been a little bit more uneasy doing that, doing a little bit of a blood collection at home. But I mean, hey, it's just like a little prick on the finger. Anyone can do that.
Well, it's all convenience, right? It's about, we're a lot of driven about convenience, right? So we want to make sure, we don't need to go and drive somewhere and wait in line. And so it's about the privacy, it's the convenience that I think drives a big part of the US population.
100%. Well, so Guido, let's go back to Cola Alert real quick. In Europe, is the product currently bringing any revenue over there?
Yeah, so we, as I mentioned, we started the commercialization post-COVID. So that was really beginning of 22. We have signed up several laboratories. And so, envision, look forward into the US, right? We would have a deal with LabCorp and Quest, and they would, for example, sell our test. That would be an example, right? So in Europe right now, we're doing with other labs that are based in Germany. So we do a tech transfer, which meaning we train the laboratory to run the test. And then the laboratory performs it and sends the results to the patients. So that's one approach. The other one, we also have an online shop, which is working actually quite well. And then the third business that we started to get into is employee benefits, right? So there's a lot of companies that like to offer our test on an annual or biannual screening for all their employees. And that's another way, right? So because they care about, there's a lot of companies who really care about their people, and they invest, $600, $700, $800 a year on benefits for the patient that they can select what they want. And our goal is to have our call alert test more and more incorporated into those corporate screening programs, because it keeps people healthy, right? And what's also interesting, Aaron, is that there's a lot of guidelines about, like, Europe has guidelines to start testing for colorectal cancer after 50, right? The US recently switched to age 45. Unfortunately, the woman I talked to you about was mid-30s, right? So it's unfortunately that colorectal cancer is moving more and more to younger ages. And so when you think about a company, right, so they don't necessarily want to limit it to the older people. They want to offer it also to younger people, because we have several examples of people under 45 that actually were identified with cancer. So we don't want to miss those, because those are unfortunately the more severe cancer and have a lower survival rate. So absolutely, Call Alert is moving forward, is again the ability to order it online, the ability to work with companies to do it, then also gets us into more discussions with the private insurances and public insurances. So it's a really interesting approach how we start to commercialize this product in Europe. Revenue wise, you've seen we were going to report our financials in the next coming weeks. We're clearly not large revenue, but we see a nice ramp up. Because you have to create the awareness too, right? So it's not a test that everybody's just going to go, oh, I want to test the right way. So it did take some time to create the public awareness within Germany, what the test is, how to order it, how to read it, right? Get the physician convinced about it. And further, we also expanded into other countries. What's really interesting, we went into some of the Eastern European countries, because like Poland, for example, is a good example. Poland is actually a very interesting country to launch such tests, because there's a large group of private payer, right? So the Polish people, for example, are used to pay for certain elements where maybe the Germans are not as much, because they have the public health insurance. So it's interesting for us to explore other segments of the European market where we actually can continue to grow the business before we then ultimately go into the screening guidelines and coverage by public insurances.
Of course. Yeah. I mean, I was curious about that kind of, I guess, the revenue or commercialization model in Europe, where, of course, in countries like Germany, there's not as much out-of-pocket spending on healthcare as there is here in the United States. I mean, I think a lot of Germans would be shocked if they found out what Americans pay for some things over here. But hey,
Yeah,
I mean,
that's for sure.
There's who knows if that'll be the case forever, or if at some point maybe Americans that don't have a lot of money will be able to get medical care without going bankrupt. Who knows? Maybe.
Yeah.
Guido, so we're kind of running up on the clock here, but is there anything else that you want to tell us about the company? Why should our audience, our investors watching, why should they keep MYNZ on their radar?
Yeah, I think that's for us clear that the passion of what we have is being able to democratize the colorectal cancer screening market, right? So we're developing products that can be globally sold, can be completely sold by any laboratories and hospitals in the United States, right? And not just by single laboratories. It's an ability to do it at home, very simple. But most importantly, Aaron, right? So this product, for all of you who listen and hope continue to watch, really, it is about the clinical performance. In colorectal cancer, it's really important that you not only have a good sensitivity for colorectal cancer, but this precancerous lesions is key for the future. Because if I would ask any of you, would you want to test to just identify cancer or the precancerous lesions? Everybody would probably say, no, I want to have a test that gives me a high chance of identifying if I have precancer, so I can eliminate the lesion and not move into cancer. And that's the holy grail. So again, continue to watch us. We have more data to come out. We're fascinated about, where we're moving with this product. We're passionate about it because it's all about saving people's lives. And also, being able to, the more people we can identify precancer, the less it's going to cost, the better the quality of life, right? Because another example, we just had a colleague of mine just had a colonoscopy, followed the 10-year paradigm, and he'd identified one of his precancerous polyps, and they took it out. And luckily, he did the colonoscopy. He didn't turn into cancer. But you should not wait for 10 years. You should do something in between. Because my colleague would have had a colonoscopy 6 months later, and at that stage, the advanced adenoma would have moved into a cancer stage, and you will be a cancer patient. So do something in between, and that's the passion of our company.
Well, yeah, I mean, it's been great to learn more about MYNZ today, Guido. I mean, it sounds like you guys are doing some great work, and I wish you guys, nothing but luck in your journey, because look, everyone should be screening for different types of cancers. Of course, everyone watching probably has had a family member or a loved one impacted by some form of cancer at some point. So, I mean, at the end of the day, what it comes down to is just early detection, and that's what companies like yours are working us or helping us achieve. So Guido, again, thanks for coming on. Hopefully we'll have you back on Benzinga Live anytime you guys have more updates in the future.
Absolutely, Aaron, was very. Thanks again for letting me speak here, and looking forward to catching up with you again in a few months.
Of course. All right, guys, that was Guido, the CEO of MYNZ, ticker MYNZ, trading on the NASDAQ. If you want to go check that out, again, MYNZ. All right, guys, let's do a quick wrap up. Let's pull up our BZ Pro, baby. Let's go to SPY. Okay, we're back in the green. I think we're gonna go in for an 8th day in a row here in the green in the S&P 500. I don't even know if I've ever seen that. I mean, you probably got to go back to like the 2020 rallies or something last time that happened. Qs looking all right. The Dow pretty flat but green. What's pulling the Dow down? Is it energy today? XLE? No, it's not. Is it the financials? XLF? No, it is not. What's pulling the Dow down? Someone's pulling the Dow down. Not sure. All righty, guys. That'll be a wrap for us today. 12:50 p.m. We'll have cannabis starting soon. Make sure to stay tuned for that. Till then, stay green, and we'll be back on Benzinga Live next week.